Hello everyone, welcome back to my YouTube channel. So today we are going to learn financial statements with adjustments, which is a very important topic for your exams. In the previous video, we learned financial statements without adjustments. So now we will see what adjustments are and how to treat them in trading account, profit and loss account and balance sheet. Clear? So let's see the meaning of adjustments. After preparing the trial balance, some items related to the current year, clear, may still be left unrecorded, means they are not recorded. So these items are called adjustments and they are always given below the trial balance. It means what? It means certain income or expenses of the current accounting year, they are not yet entered in the books of accounts. So we make adjustments to include them before preparing the final accounts. Clear? And they are always given below the trial balance. Clear? Now see next one. The accrual concept of accounting. What it says, income and expenses must be recorded in the accounting year to which they belong, whether cash received or paid or not. What accrual concept says means these adjustments are made because of the accrual concept. Clear? What they say, some incomes and expenses belong to the current year, but cash is not yet paid or received, or cash is paid, received for another year, means prepaid. Clear? So to follow the accrual concept, we pass adjustments. Clear? See, for example, outstanding expenses. For example, see here, means salary of March not paid. Salary of March not paid, and this expense belongs to current year. Means cash is not paid. But what accrual concept says, income and expenses must be recorded in the accounting year to which they belong, whether cash received or paid or not. In this case, salary of March not paid. That is relating to the current year. Means what we have to do? We have to record this salary due to accrual concept. Clear? Now take one more example. For example, prepaid expenses. Prepaid expenses means the cash is paid or received for another year. For example, insurance paid in advance. Means this expense does not belong to the current year. It means what? Here we need to deduct this prepaid expenses to follow accrual concept. Means what accrual concept says, income and expenses must be recorded in the accounting year to which they belong. Prepaid expense means what? The amount paid for another year. That's why we need to deduct to follow the accrual concept. And outstanding expenses means the amount not paid, but that is relating to the current year. Means what we have to do? We need to add. Simple, right? So in this way we have to follow the accrual concept. Clear? Now let's see the important points. Every adjustments affect two places. Means below the trial balance they will give the adjustments, right? That will affect two places. Once trading account or balance sheet, or profit and loss account or balance sheet. Clear? And one effect goes to here, trading account and profit and loss account, and other effect goes to balance sheet. Clear? Now let's see the adjustments one by one. So in this class I am going to explain only 4 adjustments. Clear? So adjustment number 1, that is closing stock. This closing stock adjustment we have seen in our last problem. In the last class we have solved one practical problem. In that closing stock the adjustment was there. We have recorded this closing stock in trading account as well as in the balance sheet. Right? So let's see the treatment of this closing stock. First one, credit side of trading account, right? And asset side of the balance sheet under current assets. Clear? Credit side of trading account and asset side of the balance sheet. See, every adjustment affects 2 places. So for closing stock, first we need to enter on the credit side of the trading account and asset side of the balance sheet. Clear? And now second adjustment, it is outstanding expenses. Outstanding expenses means what? Expense, in the example I have already explained, it means the expense related to the current year but not yet paid. But not yet paid. Clear? Outstanding expense, it means what? Expense related to the current year but not yet paid. Clear? I have given the example, right? Salary of March, that is not paid, but that is related to the current year. Current year. So here what is the treatment? Add to the related expenses in the trading and profit and loss account and show as current liability in balance sheet. Show as current liability in balance sheet. Clear? Add to related expenses in trading and profit and loss account. Why we need to add this outstanding expenses? Because the expenses belong to the current accounting year, even though it is not yet paid. Clear? According to accrual concept, expenses must be recorded in the year in which they are incurred, not when they are paid. Clear? Now let's see the example and show as current liability in the balance sheet. Now for example, salary for March, that is rupees 3000, paid only till Feb, means March salary they have not paid, means this is an outstanding expenses. Clear? March salary belongs to the current year but not yet paid, therefore it is outstanding. Here we need to add this outstanding expenses. Clear? Why? Because the expense belong to the current accounting period. If we don't add it, what happens? The expenses will be less and profit will be more. This is wrong, right? So we add outstanding expenses. Clear? So first adjustment is closing stock. Treatment is credit side of trading account and asset side of balance sheet. Second one is outstanding expenses. Expense related to the current year but not yet paid. First, we have to add to the related expenses in trading and profit and loss account and show as current liability in the balance sheet. Current liability means outstanding expenses, right? Expenses. That's why it shows as current liability in the balance sheet. Clear? Now let's see the third adjustments, that is prepaid expenses. Prepaid expenses. Prepaid expenses. It means what? Expenses paid in advance. Expense paid in advance. Now treatment is deduct from expense in profit and loss account and show as current asset in balance sheet. See, deduct from expense in profit and loss account. Why we need to deduct from expense in profit and loss account? Because they do not belong to the current accounting year. If outstanding expenses means they are belong to the current year, so we will add. But here prepaid means expenses paid in advance, means paid for another year. So we need to deduct deduct from the expenses in profit and loss account because they do not belong to the current accounting year. What accrual concept says? Only expenses related to the current year should be charged to profit and loss account, but prepaid expenses relate to the future period. So they must be removed from the current year expenses. Clear? So I hope this is clear to you all. Now let's see the example. See here, insurance paid rupees 12,000 for 12 months and accounting year 6 months only. But we paid the insurance for 12 months, but our accounting year is only 6 months. Means we paid extra 6,000, means that is prepaid. Right? See here, expenses relating to the current year only rupees 6,000. Remaining rupees 6,000 prepaid. What we have to do? We have to deduct from the expense in profit and loss account and show it as a current asset. Current asset in balance sheet. Clear? See, if we don't deduct, expense will be more and profit will be less. This is wrong, right? So prepaid expenses are deducted and show as current asset in balance sheet. Why? Show as current asset in balance sheet because the business has already paid the amount. Already paid the amount, but the benefit is still to be received. Benefit is still to be received and the benefit will be received within 1 year. Within 1 year means current assets within 1 year or short period of time. Right? That's why we have to show as current assets in the balance sheet. Clear? See here, in the same way, outstanding expenses, see here, outstanding expenses, they show as current liability in the balance sheet. Why? Because they are expenses already incurred, but payment is still due, right? And they are payable in the near future, means these outstanding expenses are usually paid within a short period of time. Payable means current liability. And here prepaid expenses. Prepaid expenses. It means the benefit that is still to be received means current assets in the balance sheet within a short period of time. That's why we show as a current asset in the balance sheet. Clear? So I hope this is clear to you all. Now fourth adjustment is accrued income. Accrued income. It means what? See here. Accrued income, it is the income that has been earned during the current accounting year but has not yet been received in cash. Clear? What is the meaning of accrued income? It is the income that has been earned during the current accounting year. It has been earned but related to the current accounting year, but that has not been received in cash. Clear? What is the treatment? Add to income in profit and loss account. Add. And show as current asset in balance sheet because we are receiving. Means current assets, right? Receiving. We have to receive that within a short period of time. That is usually within 1 year. That's why we need to show as current asset. Means that is the income. We are receiving the income. So it show as current asset in the balance sheet. See, for example, interest earned for March rupees 2000. Interest earned for March 2000. And cash will be received in April. April. It means what? Income belongs to current year, means March. Cash not yet received. Still it must be added to income. But cash will be received in April. But that is related to this cash we are going to receive in April, that is related to our current accounting year. That's why we need to add to income in the profit and loss account. So what accrual concept says? Income should be recorded in the period in which it is earned. Earned. Clear? Remember the word earned. But not when cash is received. So accrued income must be included in the profit and loss account. Clear? So these are the 4 adjustments. First one, it is closing stock, that is credit side of trading account and asset side of balance sheet. And outstanding expenses, expenses related to current year but not yet paid. See, salary for March paid 3000, paid only till February. Means for March salary they have not paid. Means March salary belongs to the current year but not yet paid. Therefore, it is outstanding. Means we need to add. And prepaid expenses means expenses that is paid for another year. Means we need to deduct. Means we are recording the items, they are only related to the current accounting year. If it is for another year, we need to deduct. And accrued income. Accrued income. This is the income we are earning. Right? So that is add to income in the profit and loss account and show as current asset in the balance sheet. Means as per the accrual concept, income should be recorded in the period in which it is earned, not when cash is received. Clear? So these are the 4 adjustments of financial statements. Clear? So I hope these 4 adjustments are clear to you all. In the next class, I will continue the remaining adjustments. If you have any doubts in this class, please leave a comment. Thank you.